Hey guys, Doug the Retirement Guy here. We got an update on the TSYY, Granite Shares Yield Boost Tesla ETF. We know we've had quite a few people comment about this. Could you do a video on it? Can you give us an update onto it? So we thought we'd throw this in the cycle and get it in the hands of our experts to give us the updates, the changes, the performance, buy, sell, or hold, give you guys all the information you need to make some strong decisions about the Tesla TSYY from Granite Shares. So let's get into that today and see how well it's doing and should we invest or not. Notice to all viewers, past performance does not guarantee future results. The information provided in the video is educational and informational purposes only. It should not be considered financial or investment advice. The examples and suggestions discussed are illustrative and may not be suitable for individual situations. Always consult a licensed financial advisor or professional for making financial decisions. So who is TSYY? Well, basically the Granite Shares Tesla Yield Boost ETF. So the Granite Shares Yield Boost of Tesla is designed to generate income from option strategies linked to the 2x long Tesla Daily ETF. To generate income, TSLY sells put options. I don't know if a lot of people understood this one or knew this one, but they're actually selling put options on the leveraged ETF linked to the 2x Tesla Daily ETF. Now, I know there's a lot of things being said there, so we're going to break it down for you. These guys are designing to to get income from option strategies. And what they're trying to do is get 2x long the Tesla Daily ETF situation. Okay, so they're trying to get double what the daily Tesla is producing. And they're doing it by selling a lot of put options out there. And if you don't know what put options is, they're basically going out there and saying that the Tesla stock and the Tesla ETF is going to be dropping off. And they're going to make money when they sell things at a lower price. So as Tesla has its volatility downward, these guys are making big bucks. If it starts to go up, they're not going to make the money that you expect them to because they're selling the put options versus call options. The performance, this is a high yield ETF. This is going to give you 140% annually on an estimated 12-month basis. This thing is not 12 months old yet. So this is a calculated 140 number. The return of capital is between that 81 to 98%. So they definitely use it accordingly. Now, of course, everything's going to put on here eroding net assets value, that you have that potential when you use return of capital. But you also have to remember this is a tax strategy that is used by a lot of the ETF companies. It's allowed to do this, and Granite Shares is no different. They've jumped onto the bandwagon and they're using this as tax advantages. So we have to watch the assets under management and make sure that we're not losing and taking money from my right pocket to my left pocket, but we have to make sure we're covering it. And then the approximate, including year to date total return, approximately including your dividends, is around 87%. So even if this thing is at the 140%, we're realistically looking at an 80% return, which is huge. I'm telling you right now, it's huge. So this is why I want to make sure we're talking about this, showing people what's going on. And I personally believe the Tesla product is starting to rebound. It is starting to come back and grow. The media, you're not hearing much coming out of Elon Musk. You're not hearing a lot coming out of there. They're quietly rebuilding rebuilding the business. He's refocused himself on the business, and it's really starting to come alive again. This fund did launch December 18th of 2024. So like I said, we're not a full year into it yet, but so far we got enough track history to give you some good calls of what's going on. Now, I say this, Granite Shares with this yield boost package, the Bitcoin, everything else that they do, and the TSYY is all part of this, they are showing that they are coming to the game of the weekly income ETFs. When you compare this with ULTY, Roundhill's HOOW, and all these other funds, I mean, I can go over and we'll do some comparisons of Tesla products. These things are all built for large income. So Granite Shares, my hat's off to Granite Shares, that these guys have the potential to play with, I'll call it the big boys, the Yield Maxes and the Roundhills, and these guys can play long-term with it. So let's take a look at how they're doing currently. So I call this a downward course, and I'll tell you what's going on. And it's actually starting to, in my eyes, starting to balance out. And we're seeing this with a lot of different Tesla packages and a lot of Tesla ETFs. It has fallen and fallen, but they're getting to a point where it's not going to go much lower, or they found what I call their natural bottom. Now, when we look at this thing, 1 month out, they're down 9.62%. 6 months, they're down 57.02, and year to date, they're down 63.45%. This is huge, and this is very dangerous. But if we're getting into it today, we're really close to rock bottom pricing. In February 20th, this thing was a $25 ETF fund, 2562. August 29th, it's down to $8.17. And we take a look at the 52-week low is $7.94. So we're really only about 23 cents from the rock bottom that it was. Now, is that a good thing or a bad thing? Well, I also have to look at the chart that you see on the screen. And what do we see? We see almost flatlining. We see very little growth up. We see very little drop down. Granted, we're going to see this in a 9% drop. If we dial in closer and deeper into this, you will see the monthly drop movements. But over a long period of time, we're not seeing those big drops over the past, I know we're putting up here 180 days, but in 180 days, we were up to $25. So what I'm saying is we're seeing a stabilization of the Tesla, and I believe we're going to start to see this thing start to slowly move upward. We take a look at TS announced the dividends announcement, and the first thing I show you on the screen is look what happened in June. June of 25, they basically turned this thing into a weekly. So it was a monthly, and it turned into a weekly. And look at what happened since then. Look at the flat line. It is just a standard paying out dividend item each and every week about the same exact price. So when we look at August 8th is 22 cents, August 15th, 22 cents, August 22nd is 21 cents. Now I gotta go to the rounding up thing. It's 21.7 cents. So three 1/100ths of a cent, and you'd be back up to 22. August 28th, 22.6. So realistically, the daily average comes in actually at 26 cents. Even if we use the number that we use is 22 cents on this, this is a steady 22-cent item. So if all of a sudden we take this thing and say, hey, we're getting 22 cents on an $8 fund, there's someone else out there, and I hate to say this one in a TSYY and a Tesla video, but I also go out there and say, guys, everyone's jumping up and down. They're all excited about a ULTY paying 10 cents. And this thing's going to be double the dividend, but the price is not double of ULTY. So this is actually probably a little more cash cow than a ULTY is on a very steady basis. We look at the yield point right now is 131.86%, and they're estimating on a 12-month package that you'd be up to about 165%. So now you go back to what I just told you. Year to date, we've lost 65%. 65% from this, we're still in the mid 70s to almost 80% yield from TSYY. So very, very solid, hardcore numbers across the board. So let's do a comparison here. If I put $1,000 into any one of these funds, the TSYY of Granite shares, the TSLY of Round Hill, the TSL of YieldMax, and Rex shares TSII, we would be able to buy 1,277 shares of YieldMax's TSLY. So they win the share category. The dividend side, TSLW, the Round Hill one, pays more at 43 cents. But look at what happens when you calculate out the differences, what you're seeing into this. Weekly income, $318 a week from Granite shares TSYY. When we're only getting $134 from Tesla, even though the price of the dividend is considerably higher, you have a higher priced ETF and you're not able to buy as many shares. And then when you take a look at the monthly side of it from YieldMax, which I believe is where they need to make a change. This thing needs to go to a weekly to get competitive out in the marketplace. But 51 cents on a monthly basis, divide that by 4, and you're really probably about 15 cents, 14 cents, quick math, weekly. So it's not even really worthwhile. Now look at the numbers, the income yearly, $16,548 from Granite shares, $6,900 from Round Hill, $7,800 for YieldMax, and $4,200 from Rex shares. So if I want a Tesla package, boy, I'm telling you right now, we're going to be in Granite shares, no questions asked. I love these numbers. I love to look at it. And even with the percentages being, people telling me, you're crazy, you're losing 65% of your value of the fund. But I'm also gaining 16,000. I'm gaining more than what I invested in a 1 year period. So return on investment, we were just talking about that. Basically, the 22-cent dividend puts it now down to 26 cents. That $8.17 price tag for a 26-cent dividend gives us 31.42 weeks, less than 3/4 of a year, and we have our full return on investment on this. Now, I want to explain to you real quickly, why do we look at return on investment? Why do we do this? Well, there's a lot of dividend investors out there that live off of return on investment. And we've actually been requested to do a video onto it, and we'll work on that here shortly. But here's what you do. If I take my money and invest into TSYY, take my $8.17 and buy 1 share of it, in 32 weeks, I'd have my $8.17 back just purely by dividends. If the dividends hold, and it's showing that it is holding at that 22-cent, so we'll probably keep the average across the board. So right now it looks very comfortable that it will. In 32 weeks, I have my $8.17 back, and I get to put that in my pocket, and I have this thing owes me nothing. If the fund goes down to $2 a share, it owes me nothing. All I'm looking for is that 22 cents per week dividend from that share. And then I call it, we have a cash cow. We have no money invested into it. We got all our money back. And now as long as that fund stays alive, and as long as that fund continues to pay dividends, I have money coming in, income, income, income. That's what return on investment is so important with dividend investing. You want to get as much money out as you possibly can before you start living off of that 22 cents on a regular basis. And that's how we do this. And that's why we watch the return on investment. If I can find anything that's under 1 year, boy, I am all over it. I am looking at it seriously, aggressively, and very hard to invest into that package. You get me into that year to year and a half bracket, we're definitely looking. You take me over 2 years, I'm looking somewhere else to invest my money on the dividend side of it. You have to have something seriously if you're going to be over 2 years where I'm going to sit and park my money. So now Granite Shares, again, uses exclusively the TSYY, does use return of capital. Now this last payment, we get these reports now. We've been qualified to get the reports early. So we're able to look at this ahead of time, and the reports come to us real well with all of the ROC part of it. And the August 28th payment was 100% income. There was no return of capital even used on this one, and that is huge and positive. I wish it had some because of the tax purposes onto it. But what it said to me is that Granite Shares come back and said, we made enough money from the TSYY options and so on that we could give out everything at 100% income. We did not have to take one dime out of the capital of the company. So this was a positive that says we are on the right course. We're generating money. We're able to pay the dividend with no problem. Another big feather in the cap that I don't have to worry about that dividend going down. We're getting the money coming in. Hopefully next month or next week that we get something that says, hey, there's some return of capital just for tax purposes only. But overall, safe bet. So now we take a look at assets under management. And this thing right now, as of the end of August, this thing has $142 million under assets. That is huge. When you have $142 million that you can put into just basically one stock, one ETF, you can do a lot of damage with that. There are right now 15.72 million shares of TSYY outstanding. So you have a ton of shares, you have some great assets under management, and you have I'll call it well-managed package. And as long as we have volatility of TSYY, we expect to see a solid dividend. So I'm very pleased with this one as we go through it. So TSYY in our eyes is a mild buy. Now, what does mild buy actually mean? Basically means, guys, step up to the plate and buy. Don't be afraid to buy it at what price it's currently going at. So at $8.17, I wouldn't be afraid to buy this. But I would not take my entire portfolio and pour it all into TSYY. I would have it less than basically 5% or less. I would not go higher than that because it is a leverage fund. It is a leverage piece that if Tesla decides not going to have the volatility that's out there, we'll see things slow down. If the volatility picks up, we're going to see big pickup onto it. So I like being in there with no more than 5% of my portfolio in TSYY so that we can basically move in, move out how quickly we want as the fund changes. Now, with assets under management of $142 million, very, very solid, and I'll call safe program, even though these high dividends are always a high risk. but we're not worried that this thing's going to go belly up or we're going to lose it. And we keep an eye on the assets under management at all times. Return on investment is under 3/4 of a year. Boy, 2 thumbs up on that one. So I can jump into this and get my money back out fairly quickly if the dividend holds. Again, hard not to get me excited about that one. Now the share price. Now I know everyone's going to talk about NAV erosion, blah, blah, blah. Yes, it's down. It's down 57% in the last 6 months. It's down 9.62% in 30 days. But we keep going back to this next one. We are in this for income. Okay, we're not looking for growth. We're in this for income. And if I can sit back in 3/4 of a year, get all of my money back, if we lose another 10%, it's another 81 cents that we're losing. Okay, in 30 days. My point of this is if I can get my return on investment under 3/4 of a year, this turns into just a long-term cash cow. And this is why we call it's a long-term ETF. This is get your money in, wait your 3/4 of a year, get your money out, and then just continue collecting the income as long as that dividend stays where it's at. If we see a change in that dividend, if we see the dividend dropping, then yeah, we have to restructure our strategy. But this is really driven by return on investment versus income to tell us where we're at. So I think overall, guys, that gives you a good update on TSYY. It is a model buy. I would not be afraid to be involved into this one. And I have to look at my portfolio. To be honest with you, I believe we owned it. We're not heavy into it. We're probably going to get heavier into it after doing this video, just because we like what we've seen as we've done our research. Guys, it's Doug the Retirement Guy. I hope you like what we're doing. Hit that notification sound, get that ding going. Don't be afraid to miss any of our videos. If you're not a subscriber, don't know what you're waiting for, hit that subscribe button. It doesn't cost you anything, and you constantly are getting notified when we are putting out our videos, which are almost daily now. Also in comments, you guys got any comments? Maybe you like the TSYY, maybe you hate TSYY, maybe you like something, maybe you like the Round Hill package, maybe you like other different things. Let us know. We'd like to see what direction you guys like us to go and where to take it, and get your opinion on our videos. And also, we want to thank each and every one of our Patreon supporters. You guys are phenomenal, and without you, we could not keep this show going. So guys, if you can help support the channel, go down in the description, see the Patreon thing, click on it. There's a ton of information behind the scenes that you get, and we're trying to add as much we possibly can to it. So we'll catch you next time.